Yeah.
Your reading on this bull run, how much further can it go in your view?
Okay, I mean, in my view, this we're seeing is probably just a combination of events that everyone's been talking about for a few months now, which is that the Nigerian equity market is cheap, valuations look good, fundamentals look good, and we've pretty much been pitching that idea to clients. If we rewind to last year, for example, first 2 weeks of last year, we're up 6.1%. So in our view, that gives us sort of a reason for caution, because after that rally last year was sort of a lull in capital market activity. But to answer your question, we're very bullish on the market. We have a 31,000 view or index target for the market this year. What we're saying now is clients should be cautious. We expect a sell-off due to 1 or 2 reasons, and that should present a good opportunity to
I was just going to come to that point, because this is pretty much what we saw last year. The market starting very strongly. In fact, by April, it was up 35%, but obviously it couldn't keep those gains. It gave up most of those gains for the rest of the year and was up only about 18%. Where do you see the correction? Where do you think there will be the most pressure for the market to correct? Will it be when the elections kick off, or do you think it will be before that?
Okay, that's a good question. 2 things, first of all, to note when you compare this rally to last year's rally. This rally is on the back of a lot of volume, which is typically a very good sign for any rally. So, I mean, the volumes we're seeing now is just tremendous. And the second thing is there's sort of a fundamental argument for why this rally. Like, I'm kind of sort of started cleaning up banks' books, and the whole political terrain, everyone's been scared about April. That seems to be coming to sort of clarity now. So those 2 things sort of add a tailwind to this rally and sort of differentiate this from last year. But to answer your question, I think over the short term, as soon as we get nearer to April, just because there'll be a lot of need for funds for the elections, that should suck out some liquidity in the system and should pressure the equity markets in our view.
I mean, one area, you talk about good fundamentals, but this week, for instance, we've seen the Naira come under some pressure. We've seen the exchange rate today is at 154, its highest level this year, obviously, and today lost, I think, about 1%. So there is definitely some pressure, and the exchange rate is something that obviously foreign investors will be concerned about. What's your reading on that?
Well, it's tough to talk about sort of the exchange rate Naira without talking about the reserves. If you look at, just take a step back now, look at the reserves. We went from $62 billion sometime in September 2008 to $32 billion as was reported for the end of December. So that's a huge sort of gap right there, and you could expect some pressure from that. But that's not entirely cause for alarm, because, I mean, Sanusi is on record, for example, as saying that, look, as long as there's about 12 months cover of FX demand, Naira should relatively remain stable. Right now, we've got about 16 months cover. So relatively, we're still okay. I would expect some drawdown on that as the elections come nearer, but nothing more than that. We don't see sort of a fundamental problem with the exchange rate or with the Naira. And
coming back to the market, you did say that 31,000 points was your index, your target index figure for 2011.
Correct.
Where do you see most of those gains coming from? Will it be the banks? We know that those banks have struggled for the last 3 years. Is 2011, in your view, the year for the banks, so to speak?
I mean, I think it's the year for the markets in general. The banks should enjoy part of that rally. One thing I usually try to tell clients to put things in perspective is, if you assume that an index or a stock, for example, is trading at 100, and this thing falls by 70%, that means that it goes to 30 Naira, per every 100. So if this now rallies from 30 and rallies by, let's say, 30%, guess what? It's only back to 39. So this thing that used to be 100 is only back at 39, regardless of the 20% rally. So even though we've seen quite a run over last year and over the beginning of this year, I think there's still pretty decent value in Nigerian equities, banks nonetheless. But obviously, you have to pick your spots wisely.
Coming back to the politics, obviously the PDP elections are holding as we speak. The PDP primaries, rather, are holding as we speak. And obviously the general view is that if PDP, whoever wins this probably is going to take the April polls.
Correct.
Your thoughts on how the market is reacting to this? It seems the market has pretty much shrugged it off, because we continue to see this market gain day to day. And like we've noted off camera, this market is really driven by the foreign investors. So it seems like there is that vote of confidence, so to speak, that we would have an election and it will be successful.
That is correct. And I think we're also all generally agreed that whoever sort of wins the PDP ticket has, pretty much higher delta of eventually winning in April. I think the message we can get from sort of the stability in the market now is that the market probably expects that there will be a continuous stability in the polity. which probably just hints at probably the market expecting the incumbent to win. But I'm not a political commentator, just to be clear. But if you ask us, what we think is, okay, one of two things can happen. Either the incumbent remains there or does not. And the big effect that would have on the market is just volatility. So if the incumbent doesn't necessarily win the ticket, you'd expect some volatility in the market just because, you know, no one really sort of knows how this is going to play out. One thing that I should add, though, is that of the two sort of frontline PDP ticket chasers, in quote, they both sort of have the same first three priorities, which is to solve the power problem, which is to solve the infrastructure problem. And it's pretty clear what sort of names would benefit from that kind of a play.